If you want to quit your job in 90 days, this is the strategy that will help you do that in no time. ICT mentioned in Twitter Space that by religiously following this strategy, you'll be able to quit your job for good and start making life-changing money. Now, he combines multiple different strategies like the ICT Silver Bullet, the 2022 mentorship model, and even his son's own trading model, all into one easy-to-execute strategy. Now, I'm going to break down this simple strategy for you in 5 easy steps. For those new to the channel, Nick here. I'm a multi-six-figure firm-funded trader, and I'm not here to sell you anything. No courses, no signals, no BS indicators. So let's get right into the strategy. Step 1. Identify what time you'll be trading this strategy. This strategy works during the 9:30 AM to the 11 AM EST time period. This coincidentally falls within the New York session, specifically when the New York Stock Exchange opens. So mark them out on your chart with 2 vertical lines. For this strategy, we will only be using the 5-minute and the 1-minute chart, nothing else. Step 2. Mark out your liquidity areas. On the 5-minute time frame, mark out your buy-side liquidity and your sell-side liquidity swing points that occur before the 9:30 AM EST. Now, for those of you who are wondering what those are, they are basically where your old highs and your old lows are. These are where there are liquidity sitting around. Above the old highs, you have your buy-side liquidity. And below the old lows, you have your sell-side liquidity sitting there waiting to get taken out. Step 3. Look for a market structure shift. What do I mean by this? Once the price has swept either side of liquidity, what you want to do here is drop down to the 1-minute time frame and look for a current swing point to be created. Once a 1-minute time frame swing point has formed, we wait patiently for a break of structure in the opposite direction of the liquidity sweep. This means that if the buy-side liquidity is swept, you want to be looking for a break of structure to the downside. If the sell-side liquidity has been swept, you're looking for a break of structure to the upside. For the market structure shift to be valid, you want to see a body closure above or below the 1-minute swing point. Step 4. Search for a fair value gap. To do this, simply look for a fair value gap within the leg of price, which causes the market structure shift to form. If there is a fair value gap, you have now all the criteria for the strategy to work. So the question is, how do you execute this trade? Simple. Place your entry at the fair value gap with stop loss covering the swing point of the market structure shift, and place your take profit at the next opposing liquidity that you have marked out earlier on. Now, if the opposing liquidity is too far away, you can target a simple 1:5 risk to reward ratio. That's it. All you have to do is follow these 4 simple steps to retire in 90 days. Simple, right? Now let me show you 3 examples of how this strategy works on the chart. Here on the 5-minute chart on the Euro-US dollar, we notice that price has created a buy-side liquidity here on the top and a sell-side liquidity here at the bottom. These are where your old highs and lows are. Next, we let price play out until one of the liquidity areas has been swept. After a while, the sell-side liquidity was swept, and this was when I hopped onto the 1-minute time frame. Here, I'm waiting for the price to create a market structure shift towards the upside, and only once we have done that, I will have a 1-minute swing low. As you can see over here, price has started to rally upwards, breaking structure towards the upside. The next step here is to look for a bullish fair value gap formed on the 1-minute time frame as seen over here. So I mark it out with a box, and now we have all the confirmations to go long on this trade, targeting the previous liquidity. So I place an entry at the fair value gap with stop loss covering the 1-minute swing low and targeting a 1:5 risk to reward ratio. Now, the reason why I targeted a 1:5 risk to reward ratio here instead of the opposing buy-side liquidity is because that the target is very far away and I want to get in and out of this trade fast. So let's see how this trade plays out. And after a short while, we smash our take profit. Simple. On to the next example. Here on the 5-minute chart on the GBP US dollar, we notice that price has been pretty bullish throughout the day, and just before the 9:30 AM EST, we identified an old swing high and old swing low. These will be the liquidity points that we are waiting to sweep. Once price has swept the sell side liquidity, I now know that we're looking for buys to target the buy side liquidity. So what do? I drop down to the 1-minute time frame and look for price to create market structure shift to the upside. And as the candles play out, we finally got our market structure shift. The next step is to look for a fair value gap created on the 1-minute time frame. Once the fair value gap has been identified, I place a buy limit at the fair value gap covering the 1-minute low and targeting a 1:5 risk to reward ratio. Again, for the same reason as the previous example, the buy side liquidity is 60 pips away and I'm not waiting that long for my trade to hit my take profit. So a 1 to 5 risk to reward ratio will do. Let's see how this trade runs. It taps us in, brings us into profit, but reverses back to our entry, brings us down into drawdown, nearly stopping us out. However, our stop loss is protected and therefore price continues to rally from here all the way to our take profit. Onto our last example, we have another GBP US dollar chart on the 5-minute time frame. Here you can see that before the 9:30 AM EST, it has created a low and a high which is pretty near each other. This is where we have our liquidity points. So when price readed the 5-minute liquidity over here, I dropped down to the 1-minute time frame and started to look for a market structure shift towards the downside. Once the impulsive break of structure happened, the next step is to identify our fair value gap. Here you can see a tiny fair value gap that has formed, so I placed a sell limit at the fair value gap with stops above the 1-minute order block that caused the market structure shift. And I targeted the opposing liquidity. Let's see how this plays out. And after a while, we smashed our TP for a simple 1:4.38 risk to reward ratio. So as you can see, this strategy works extremely well as long as you follow every single step here to the T. It's nearly impossible to go wrong with this strategy. This strategy requires you to be patient for your setup as the charts may not present a trade for you every single day. So if a setup doesn't present itself, close the chart and come back the next day. It's that mechanical. It removes the emotion out of the equation. So if you have finally found a strategy that you can finally use to dominate the market with, smash that like button, comment down below what you think about this strategy and whether it is useful to you at all. Lastly, subscribe for more trading contents like this that we post every single week. This is Callisto, Nick signing out.